All right. So now we're going to be diving into 5.2 because we're learning about how to purchase our inventory, right? So, of course, there's also that we have the possibility to return or get an allowance for the items that we purchase, right? So, often cases like we're going to be learning about purchase returns and allowances. Often cases, there will be many reasons why we need to make a refund or a return to our vendors, okay? Reasons could be they shipped us really bad stuff, things are broken, things are defective. Um, maybe there's a cheaper person that can sell the same exact product with you, the same exact quality, right? Or it could be just pure customer service, right? Maybe this vendor just is so awful with customer service that you don't want to associate with them. Whatever means it is to give you a reason to want to return your items, it's possible, right? Every purchase you make will come with a returns and or an allowance, okay? Now, of course, on the vendor side, right, they want to keep our business, right? Because as a wholesaler or if they're a manufacturing kind of company, they want to guarantee that they keep us as a customer because we're the ones that's buying from them in bulk, right? We're the ones that's buying anywhere from thousands to 10,000s of their products that they've produced or that they're trying to sell to us. So they're going to do whatever it takes to continue their relationship and continue doing business with us because of we're being one of those big customers that purchases a lot of their items. So what they would technically do for us is that they will sometimes even give us special offers, special privileges, such as unlimited amount of returns, right? That's a good one. Other ones could be discounted items, right? Or even special offers, right? Maybe, if you purchase 5,000 items here, we'll give you 1,000 for free, right? Whatever means it is to keep us as a customer and to come back to have us continue doing business with them. All right. So unlimited returns, unlimited whatever it is, even money back guaranteed. All right. Now, of course, with that being said, it just really depends on what your vendor is. But most often cases, when you do come into that situation where you are constantly returning or just bad services in general. But once again, most cases when you are purchasing in bulk, you'll have one or the other where you may purchase an item and it could be broken. All right. And that's exactly what this exact scenario is going to be. All right. Here on January 1st, we decided to purchase 100 coffee mugs from Cuppies Co. Okay, on an account, and it cost us $1.25 each, with the freight costing $100. So here, I'm just purely asking to just record the transaction. So let's record us actually purchasing the items. So, what should my journal look like?
$125 in purchase and $100 in freight.
Good, right? We're going to recognize our purchase expense, we're going to recognize our freight expense, and we're going to recognize our accounts payable, right? Because we placed it on an account. So, with that being said, this is exactly how it's going to look, right? We know that we purchased the items for $1.25 each, right? And shipping is separate, right? So that's where we recognize our purchase. Okay? Now, let's say we did receive the items, and upon receiving the items, we opened up the box, right? And we checked every single cup just to make sure that we received the amount that we purchased it for, right? We purchased 100 of them, so we're going to make sure that we have 100 of them. And we end up finding that we had 10 of those coffee mugs were broken. They were cracked due to shipping. We don't know, okay? So in this case, I want to request for a full refund for those broken mugs from the vendor, okay? And the vendor grants you the full refund. So how am I going to record this transaction? Right? I'll give you a hint. It's the title that we see right above. What are we going to be recognizing?
Return allowance.
Yes, we're going to recognize a purchase returns. Now, once again, a purchase returns is another contra account to purchase expense itself. Okay, so once again, because we purchased it at full price, right? Our full price that we purchased it was $125, right? That's 100 mugs at $1.25. That's the full price. Now I need to create a contra account for calculating those 10 mugs that I have to take away from my inventory. So in this case, purchase returns and allowances is going to be our account, but where am I going to be taking it out from and how much am I going to be taking it out from? So let's talk about how much, right? If I purchased my mugs and I find that 10 of them are broken, what price am I going to be getting a refund for?
Just the
Your
amount
purchase
of mugs.
Okay, so how much?
$12.50.
$12.50, right? And we're going to take it away from what we owe because in this case, I never paid this vendor. So they can't give me cash or credit or anything like that. They can only do one thing and one thing only, which is place it upon the bill. Or they can, save it as a future credit. But in this case, I'm telling them I want it off my bill. So we're going to reduce what I owe them, right, by $12.50. And I'm going to also reduce my purchase expense by those 10 cups. So then it shows in my book that I'm reducing the account by $12.50. And in this case, we are using the $1.25 because in this case, you can't return shipping. You cannot return tax. Or, in this case, depending on if they do charge you tax, yes, you could refund tax. But most cases, if it's a vendor to customer relationship, you won't be taxed. You'll be tax exempt, so you won't be able to do that. But for most cases, anything that is going to be included as part of the cost to ship the items to your store, right? That's where you cannot discount off of or you cannot refund for. You can only refund for the amount that you originally purchased each item. Now, in some cases, sometimes they'll have you pay for the shipping to return the items to them. And what they'll do is they'll reimburse you for that. But in this case, these are coffee mugs. There's no purpose to kind of ship them back, the coffee mugs, if they're broken, because it's going to be useless to them because they can't sell it back to anybody else either. They're not going to glue them together and resell it out to another person. No, these coffee mugs are done for, right? They're cracked, they're broken, they can't be used. So in this case, that's it. Done deal. No need to ship them back. So in this case, we are not going to refund anything that has to do with any cost that's included for the cost of the asset or cost of the inventory. We're only going to take what you originally purchased each cup for. So in this case, $1.25, and this is exactly how we're going to journalize it. We're going to reduce what we owe, and we're also going to reduce our purchase expense. So in this case, I'm not paying full price for them. I'm returning 10 of those mugs, and this is what I'm going to have. It's going to be a purchase returns and allowance. Once again, contra account to purchase expense. Okay. Any questions here? Okay. Now I'm going to talk to you about what you can do as a small vendor or a small business, right? If you're the small business owner, customer, this is what you can do, and vendors can also do this for you as well, okay? So let's say for this example here on January 5th, we received the coffee mugs, but this time, right, we found that 25 of those coffee mugs were the wrong size. Maybe we order medium-sized ones and we end up receiving extra large cups, okay? So what we can say is maybe we're requesting the vendor, hey, I want a refund because you sent me the wrong order. Happens all the time. Sometimes they'll send you another shipment by accident, okay? So if they do send you the wrong shipment, what most cases is that maybe they might talk you down to it, talk you out of the refund, and have you guys keep the product. So in this case right here, right, the vendor offers you a 20% discount, and because they say, well, at the end of the day, right, you could still sell those coffee mugs. They're not useless to you, right? They convince you that you can sell them, or you can use them inside your store, or you can, you know, at the end of the day, you could still sell them to your public, to your wherever, right? So in this case, they're convincing you to keep the mugs, and they're offering you a 20% discount to kind of reprimand, their mistake, saying, I'm so sorry. I didn't mean to send you out the wrong cups. And so what I'm going to do is I'm going to try to keep your business because I don't want you to say I'm going to go somewhere else. I'm going to try to keep your business by saying I'm going to give you a discount to to count for my mistake. I'm sorry. I shipped you out the wrong item, so I'm going to give you a 20% discount. And you have the option. Now, if you are, like most cases, right, you think to yourself, you have extra large cups and then you have regular size cups. At this point in time, it's true. You can still technically sell those cups. Maybe there's a special deal this time and you might be able to save it for inventory. Maybe you might use it for the in-stores, right? You still have those items and they could be, easy to use, or they could be something. Or you could just say, no, I don't want the 20% discount. I want a full refund. Then obviously the vendor's going to say, yes, I'll give you the full refund. But with that kind of option, and we kind of, weigh our options on it, maybe we decide, you know what? Okay, I will take your 20% discount. So now we need to journalize that we are accepting this 20% discount for their mistake because they shipped us the wrong product. So how are we going to journalize this? So let's think about it. If it originally cost me $1.25 per cup, and I'm trying to return 25 of them, all right? But I'm not getting a full refund. I'm only getting 20% discount off of those 25 cups because only 25 of them are the wrong size. The rest of them, right, they're full price because they're exactly what we want. So in this case, how are we going to calculate the discount off of this scenario here? How are we going to recognize this transaction?
So 25 times $1.25 and take the 20% out.
Correct. So what value? What amount do you get there?
$6.25.
You're gonna get $6.25, right? That's pretty much approximately five. I think you get like 4 free cups right there. Okay. You get 5 free cups from there. So in this case, how are we going to recognize that? Okay. So let's take a look at our top part right here, right? We have a purchase returns and allowances. Okay. In this case, this isn't a return. It's going to be considered an allowance, right? Because instead of getting a full refund or a full return, you're getting a portion of the money back somehow. So we treat this as an allowance. Now, again, purchase returns and purchase allowances, they can be two separate accounts, but in this case, since they function the same exact way, I'm going to teach you it as if this account was one. Purchase returns and purchase and allowances. They're going to be one unit because they essentially do the same thing. They are a contra account. It reduces the purchase expense, and in this case, right, the allowance comes from trying to return a product. All right, this isn't a discount that everyone can get. All right, so that's the difference between a purchase discount and a purchase returns and allowance, is that even though we say that we can get a discount off of it, this is a special discount because of the circumstance that we're given, because we're trying to return a product, right? The vendor decides to tack on an additional discount to reprimand their mistake, right? To say, I'm sorry. So in this case, we're going to treat this as an allowance, right? Because it's not the full refund. We're only getting a portion of the money back. So in this case, right, we are going to use purchase returns and allowances. And once again, how did I pay for it? I didn't pay for it. I owe them on an account. So it's going to apply it to the actual liability that I owe them. Okay? And that's exactly how we're going to calculate, right? I'm only getting discounted off of the 25 items that were the wrong size or the wrong color, whatever scenario it is, right? I'm only getting a discount of only 25 of those cups because out of all the other cups, they're all the correct size, they're all the correct color, they're all the correct ones. Only 25 out of them are the wrong size. So I can only discount off of the ones that are wrong, okay, or whatever that you're trying to attempt to return. And you can only take a percentage of that amount, okay? So you're going to take 25 times $1.25, and then you're going to multiply by the 20% because you get a top on top of that, a discount on top of that. So therefore, my total is for $6.25. All right? Any questions here?
No.
Okay. All right. So there you go, chapter review. Once again, we took a look at how to make a purchase in the first place, and this is what comes with the, I guess, benefit of making purchases for vendors, right? You can take advantage of discounts, but in this case, we're looking at how we can take advantage of returns and allowances. So one section is returns, where you're actually taking a full refund off of the actual product. And we also took a look at allowances, which allows us to take a look at what happens when we attempt to refund a product, but we end up getting talked into it to receive a discount. So there it is. All right. So any questions for 5.2? Okay. So let's go ahead and dive right into our chapter 5.2 exercises here. So we're going to practice journalizing our purchases and practice doing our refunds or allowances. So let's go ahead and get started. Number one, we're going to journalize and assume that all purchases were made on an account. So in this case, I'm very specific on exactly how I paid this vendor. In this case, I'm not going to pay the vendor. I'm going to owe them money. Okay? So, first things first is what happened on April 5th?
Purchase expense for $5,000.
Mm-hmm.
Rate expense for $100.
Mm-hmm.
And account payable for $5,100.
Good. So we're going to recognize the purchase of 1,000 items at $5 each. And we're going to recognize the separate freight here. going to recognize that we're not paying the bill yet. We're going to owe them on an account. And here, this is where the note is actually going to be very, very important to you because, once again, so we can keep track of the purchases that we made, right? We're also going to keep track of what items returned. So in this case, we purchased 1,000 units at $5 each. Okay? So then, on April 7th, right? We ended up returning 200 damaged units for a full refund, right? 200 units. Now, in this case, I only have one purchase of inventory, right? I only have one batch of inventory, right? So in this case, that's exactly why I had the description here, because if 2 days later you open up the package and you find something's broken, then you could go ahead and go to your vendor and be like, well, the most recent one that you just sent me, or my first one that you sent me, I found that 200 of those units are damaged. So in this case, how am I going to journalize this?
Should be account payable.
Right, because I never paid them in the first place. I owe them. So in this case, the only option I can see is here is if they took it away from my invoice or took it away from what I owe them. Okay?
Account payable for 1,000, right?
For 1,000. Now, how did you get 1,000?
Okay. Oh, I can't see the number, but it says 500 for, oh yeah, return 200 times 5.
Good. Excellent. So again, we're returning 200 items at $5 each. So therefore, we're returning $1,000 worth of items. Okay. What's my credit account going to be?
Purchasing amount.
Purchase returns and allowances. Good. Okay. So if we have purchase expense as my main account and it's debited, right? In order to decrease it, the contra account is going to be purchase returns and allowances, and this is going to take away from my purchase expense for the $1,000. So in this case, my note could be that I returned 200 units at I guess you could say broken units at $5 each, right? Because that's going to help you understand that this was dealing with the previous batch, but that's how you got the $1,000 is because 200 times $5 each is going to give you your 1,000, right? Can't return freight. You can't return anything else. So here we're only returning just the purchase price itself. So $5 each for 200 items, giving you a grand total of $1,000. Good. Okay. Then what happened on April 10, right? We purchased 750 units at $5.75 each with a freight of 75. So how am I going to journalize this?
Purchase expense for 43,1250.
$43.50.
43,1250.
Oh, there you go, 43.12.50. Got it.
Freight, I believe, was $75. And then accounts payable credited for 43,8750.
Good. Right. And once again, I'm going to make a note here that I purchased 750 units at $5.75 each. Okay. Now let's see what happened next. On April 12th, or I'm sorry, April 15th, right? We opened up the boxes and we found that 50 of them were broken units, okay, due to shipment. Okay, and we want to request for a full refund, right? The items are broken. We can't do anything about it. So, how are we going to recognize this one? Okay. Now, in this case, right, our assumption is that when you do receive inventory, your general rule of thumb is you better open up all the boxes and just check through every single item that you have. That should be rule of thumb. Always the inventory manager needs to make sure that all the items are received and that all of them are good to go. All right? So in this case, right, since now we have 2 shipments, our assumption is that when we open up our new shipment, that is exactly where we got the broken mugs for, because the first one, we already returned 200 items from the previous one because we opened up the boxes and we found that they were damaged. In this case, that's the same idea here, is that now that we have a second shipment, we opened up the boxes and now we found that there are an additional 50 items that are truly broken. So in this case, every time we make a return or a refund, usually it's associated with your most recent batch that you purchased because, right, rule of thumb is you should open all the boxes and make sure that they are all there. Okay? You can't, and on top of that, if you already requested for a refund for the previous batch, you're most likely not going to be able to do another refund off of the very first batch that we just looked at. Because our assumption is that you should have already opened up the box already. All right. So in this case, we're only focusing on this return for 50 broken mugs on the inventory batch that we opened on, or that we received on April 10. So in this case, what is going to be my journal?
You're gonna debit accounts payable for $287.50. And credit purchase returns and allowances for the same amount.
You said for 287.5.
287.5.
There you go. 287.50. Okay, right? Because we decided to return 50 broken units at $5.75 each, full refund. Right? Whatever note that you want to make sure that it makes you understand this. Right? I returned 50 of those broken items for a full refund at $5.75 each. All right, and that's going to make a grand total of $287.50. And that's going to go against my bill or go against what I owe them. Okay. Good. Let's go ahead and take a look at the next one. So then on April 20th, we decided to purchase an additional 200 units at $6 each, with the freight costing $20. So once again, how am I going to journalize this? Mm-hmm. Mm-hmm. Good. And of course, I'm going to make a note here that I purchased 200 units at $6 each. Okay? Good. Now let's take a look at April 22nd. What happened here? They were the wrong color, right? But somehow the vendor convinced us, hey, you could still end up selling those units, but to say we're sorry, we'll offer you an additional 20% discount off of those 25 items that were the wrong color. And we were willing to accept it. So, how are we going to calculate this time? Mm-hmm. Oh, hold on to insert some more. Okay, so date is 4/22. Okay. That's not the right calculation. We can only take 20% off of those 25 units.
28.75 is the discount, right?
Oh, and not 28.75. So let's take a look. How much did it cost me per unit? $6, okay? How many am I attempting to return? Is 150 good? So what is 20% of those $150? $30. Yes. So in this case, right, we're not including the freight price or we're not doing the previous one, right? Our assumption is that we opened our new batch of inventory, right? Therefore, we counted and we noticed that 25 or a whole box of the shipment were the wrong color. So in this case, right, we can only discount what we're trying to attempt to return. So we're only taking a discount off of 25 units. Okay, so there we go. And it's for $30. All right. So 25 times 6 is 150 times 20% off of those items that we just purchased. You're going to get $30. Okay. So in this case, what account am I going to use for good, right? This is going to act as an allowance. All right, and I'm going to go ahead and also I can't find my O. There you go. So once again, we are returning the items, but we're actually keeping it. But in this case, that's how I'm going to interpret is that I'm trying to refund 25 of those units at $6 each. However, I am going to be receiving a discount off of on that. All right. All right, last but not least, our last thing that we have here on the 25th of April is that I purchased 500 units at $6.25 each, with the freight costing me $50.
So your purchase is $31.25,
Okay, and
and then you'll list your freight cost at $50, and the total is $31.75.
good. Once again, description's going to be purchased 500 units at $6.25 each. Okay, good. Excellent job, guys. So that's exactly how it would look like by just journalizing. First things first is we need to purchase the items first in order for us to be able to discount the item or return the item. So you need to recognize the first thing transaction here is that on that day I received my inventory. I'm going to recognize that I received the inventory and I received the bill on top of that. Okay? And then the second thing is now that I saw that I opened up my boxes, that's where I can go ahead and determine, well, do I need to refund or request my vendor for a refund? So that's what we're doing here. We're going to take a day by day and we're going to look at the scenario, translate it, and understand how we're going to journalize it. So here, this is exactly what we're going to be doing for the rest of the 15 weeks. So good job, everybody. Any questions about this? Tomorrow, we're actually going to be taking a look at how we actually start costing the items that we sell.